In this video, I'm going to give you a very basic framework, investment ideas, and basically kind of how I find them. For those of you who don't know who I am RedemptionTrades. I used to be an institutional trader. I had access to some of the coolest cutting-edge data feeds and news feeds money could buy. And the truth and the reality of the situation is, all these cool toys are likely out of your reach, and that includes me for the past couple of years. At this point, I know most new people will say, well, it's futile, why even try? It's an uphill battle. And I'm going to tell you to try, because being a market structure, market mechanic type of guy, I would argue that you can arrive relatively close to the same conclusions that these guys do by just finding certain immutable facts or high probability outcomes. For example, and again, none of this is an avocation to buy or sell. You alone are responsible for what you do. And obviously subscribe, like this video, share it, and try to find someone else to subscribe to my channel as well. Tesla getting their S&P 500 inclusion. Stocks being added and removed from indexes is nothing new. It happens at the end of every single month. It's called a rebalancing. Now, what set this apart from any other inclusion is that it's such a high-profile stock that this is one of the biggest inclusions in the history of the S&P. So quickly re-review the information I just gave you. You know that there is a big high-profile stock inclusion into the S&P 500, right? And in order for them to include it into the index, what do they have to do? They have to buy it. So when they buy it, because it's also an index, the index is also basically like a portfolio, but the index has to keep a certain weighting for all their stocks. And because currently they have 0% of Tesla within their portfolio and within the index, they have to add in, I think it was like 1.8% of that into their index. So you know that they have to buy this fundamentally for them to add this into the index. Now, obviously, this being me and my channel, I always want to tell you some of the weaknesses that come with this, because there is no truly riskless type of ordeal. I don't care what anybody says, there's no way you can actually go into something without any sort of risk. And if you're new here and you appreciate some of the honesty, please subscribe, like this video, share it, and get someone else to subscribe as well. Now, one succinct weakness to this thing is basically the weighting. And, you know, if this was some $5, $10 stock, they wouldn't have that much difficulty, because if you look at the level two between a $5 or $10 stock and, say, Tesla or whatever, right, you'll see that they're kind of few and far between, and there's very little liquidity on both ends. So for them to add a couple million Tesla shares into the S&P 500 is going to be a little difficult, and especially since they have to get it done at a certain point, or they said they were going to do it at a certain point, they had to buy it all there, so that means they have to keep going out the books. But if it's like a $5, $10 stock, and, you know, if you've ever seen those books, they're like a penny each, whereas Tesla's like a couple of dollars each sometimes. The second one is, and I kind of already addressed this in the first, but I'm just going to reinforce this, but the price is also somewhat of an issue, because the lower the price is, the more easy they can actually add this thing without having a massive positive effect compared to if it was a more higher price stock. There's probably a few more that I missed out or forgot about, because I'll be honest, I never really played uplistings or inclusions too much. It was more so toward the latter of my career, and I just never really found too much fun with it and so forth, whatever, right? But the other part of this for, you know, ideas is that there's also a sister version called the delistings, which is where they're getting kicked out of the index and so forth, right? And again, that's just another idea. Instead of it being added in where they buy it and put it into the portfolio, they're selling it and kicking it out. I just remember one really quick other example, and the reason why the Tesla one worked out so well was because it was all concentrated on a single day. They had to get everything done and into the index portfolio before that end of day, right? But for certain other stocks, there is a scenario where essentially they can take the entire week to get in, depending on liquidity and so forth, and they can get it done before, you know, the end of the month and so forth, or whatever the day that they said they're gonna rebalance on. Now, on other scenarios as well, on the day, depending on liquidity, they could have already preemptively acquired or offloaded all the shares they needed, to the point where it might have actually misweighted the portfolio again, and they actually have to, you know, if they were to acquire and buy something, they now have to sell it because they have too much, because, you know, their portfolio is misweighted now, right? So they have to sell it, and, you know, vice versa. All of this is to say that there's a lot of work that goes in underneath all this, and you actually have to put your shoulder to the grindstone. And you'll find out really quickly why I get annoyed with a lot of people is that, you know, you find out who's just reading a bloody headline versus someone who's actually doing the work. And I'm not damning a lot of the people who just read headlines. Some of them actually do remarkable research underneath that, but it's based off a lot of their expertise, which I'll talk about in the next video. But for now, I'm going to break this up into separate videos. But for now, just because you're a day trader doesn't mean you have to trade every single day. And watch the next video.